Hello everyone. We will complete in our course QuickBooks Online, and in this video we will discussing fixed assets and depreciation, and we will see how we can record fixed assets and how we can arrange the depreciation for that asset. So let's take an example about that your company bought a furniture from XYZ company, bill number 228 by $5,000, term 21030, and the useful life for that asset is 5 years, and the depreciation method is a straight line method. So all the details required to manage recording fixed assets and depreciation are recorded here. So the first thing we have to do is to identify. We will use expense or bill to record this transaction or this fixed asset. So because we have a period or a time between the date of occurrence for that organization and the due date of that bill, and we have here 30 days. For that, we have to use what? To use bill. And this is the first thing. So, to completely and accurately process fixed asset and depreciation, the first thing we have to do is to create bill for that furniture. And after that, the second step here is to make the necessary processing for depreciation for that fixed asset. So let's go back to QuickBooks and to see how we can make these procedures. So the first thing here, from the menu, expenses, and select bills. Add bill here, create bill, and also okay, this is the data we have to enter in the bill. The first thing is vendor, from whom we make a purchases. I think we purchase from XYZ company. Okay, we choose, and the term here, as in our example, net 30 days, and bill date, due date, and the number of the day, the number of the bill. I think it's 228. Okay, 228. And here we scroll down, we go here to category and choose the amount. Here we talking about furniture. For that we will, yes, furniture, and the category it classified as long term, so choose the furniture account, and if you have a description you can write anything here, and the amount which we purchased, I think how much, 5,000. Okay, 5,000, and here we have to save and close. Now the bill was saved, and to get assurance about our working is correct or not, we have to go to transactions and chart of accounts, and to see here we can go and furniture accounts, okay. So furniture account, fixed assets, and the amount or the value of that assets which entered by the bill which created before. So this is the first step or the first procedure to deal with fixed assets, and it will be necessary to complete the second procedures or the second procedure for all fixed assets except land, and this procedure will be related to depreciation. So we can go to make a depreciation and prepare the depreciation. We can go to new at the top of the screen and click, and here we choose other, journal entry, and identify the date. So as you see in depreciation, we could make it at adjustment time. What we mean by adjustment time, that mean at the end of the period or accounting period, we can make the depreciation. So you can choose December and 31 of December, and here we have to have two kinds or two accounts. The first one is what is depreciation expense, depreciation, and it classified other expense, okay, right. And as we have details in our example that the life the useful life 5 years, and the cost of that asset 5,000. So for every year we have $1,000 as an depreciation expense. So depreciation expense here we will record 1,000, and in description we can write depreciation for 2024. The second here we will see if we have accumulated depreciation. No, we have no accumulated depreciation. For that we will go to add new and click. Type of account, fixed asset, detail of accounts, accumulated depreciation, and here we can name, we have to choose the name. We can set that accumulated depreciation, accumulated depreciation for I think we're talking about furniture. And is it sub account? We can choose this is sub account of furniture. Yes. And when you do track finance, choose one. We have to choose I think today we have to choose one. Okay, it's not necessary for that. We scrolling down and make save and close. So as you see here, the account accumulated depreciation for furniture, as you see, we have to go and make it save. Yes, okay. The entry was saved, and also to get to verify our accounting processing, we have to go again to chart of accounts or reports, and after that we choose balance sheet. And before running the balance sheet, we have to identify the date. So because this is at the end of the day of the year, we have to choose this one and choose the last day and run the report. In this case, we have to have furniture, as you see, furniture, and accumulated depreciation for furniture 1000. So the net book value for furniture according to these details equal 4000. So the value of furniture reduced by 1000. This is in balance sheet. Let's go back to check if depreciation expense shown in the profit and loss. So okay, here, and you will be careful about the date because the journal date is in 31 of December. For that we have to change the date here and run report. Scroll down, expenses, other expenses, depreciation, and the cost or the value of depreciation is 1000, and this depreciation related to the year 2024. So here in this case we completely process buying or recording fixed assets and depreciation. So let's move to another thing, or the last thing today. Actually, to to record expenses and bills, we have two main methods. The first one is normal. What we mean by normal, if we make the expense or the bill for one time, for that we use we perform it as we discussed before. But if this expense or purchases, or we have contracts related to the expenses, we have to record it by recurring transactions. What we mean by recurring transactions, it repeated for a specific time or a specific period, it will be repeated. For example, when we're talking about the internet subscription, you make a contract with the company for 1 year. This means that the monthly expense for internet will be the same during this period until you manually add for every month a bill or expense related to internet expense. If you use recurring a transaction, in this case, automatically a QuickBooks will perform that duty according to your condition. But recurring a transaction or transactions has a specific conditions. What are that conditions? Same vendor, same period. Here we're talking about week or month or year or something like that. Same amount, fixed amount, as we said before in our example, internet subscription, monthly $10, for example. For a year, in this case, the amount is the same, and the same account affected. In our example here, we're talking about internet expense. So this transaction can be performed by using recurring transactions. So let's have an example here. Monthly rent payment 1000 by check to tech company, contract period 24 months. Okay, how we can perform that kind of recurring transactions? We will go to QuickBooks and click new, and it choose check, because our transaction in our example we will use check. So click check. Mhm. Okay, for whom we will pay? I think for big company, and let's use the same Bank of Palestine. Okay, um, this the date, payment date, let's see okay, for example, 31 of December. Okay, and here we have to identify category. Okay, but uh, rent expense, rent rent expense. Okay, and monthly expense we can write here, and I think 1000 or yes, 1000. And here, as you see, we normally fill all the details, but this is how we can classify it or transfer this transaction as recurring. We press here make recurring. Okay, let's click and see. Okay, recurring tick company scheduled. Okay, create day in advance, before 5 days, for example. BE, okay, transaction. Oh, in interval here, choices daily, weekly, monthly. In our example, the rent we will pay monthly. So on the date, what is the day? uh, first first day, or the second day, or third, or last day of the month you have to pay that expense. So let's say third of the month on Monday. Okay, every month. the, the date started here, let's say, 1 of November, and the end, uh, none, or by the date we talking about a 24 month. So here it will be ended in um, uh, 2026, and I think it will be in um, October. So this is the details, and okay, here we entered all the details related to recurring check and save template. It cannot be before today. Yes. Okay, starting, it will be 1 of December. 2 of December. Okay. Save template. Okay, recurring are saved. Um, let's go to again profit and loss, and okay, run it again, and let's check. As you see here, in income statement or in a profit and loss, under expenses we have equipment rental in the same amount. For that, it now when we make recurring check every month, QuickBooks will prepare automatically this expense and check and make the necessary procedures to do that. So I think that's it. That is enough today, and see you in the next time.